Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we welcome back Ronald Stöeferle, who's the managing partner and fund manager at Incrementum and author of the annual In Gold We Trust report. Welcome back to the show, Ronnie.
Hi, Karem. How are you?
Very good, thank you. As we're now heading towards the end of the year, I think it'd be good to go over what were some of the highlights within the markets for you, Ronnie. Obviously, gold has had a great year and the mining stocks less so at the moment. So will we look back at 2019 as the year that gold finally broke out? In one of your most recent publications, you suggested that the gold breakout is definitely a signal that should not be ignored. So talk to us about this.
Yeah, I held a couple of keynote speeches recently at the Precious Metal Summit in Zurich, for example. I was at the Edelmetallmesse in Munich, and the leitmotif of my speech was that gold is actually the seventh sense of financial markets. Now, we all know the first five senses, and we know the sixth sense, but the seventh sense is something like intuition, some sort of a gut feeling, intuition about the future. And therefore, my thesis is that the breakout that we saw this year in gold is actually a sign that gold is sniffing out, that gold is starting to discount that something big might happen very soon. Now, the question is, what could it be? And from my point of view, that's basically a recession and or inflation ahead. So I'm making the case from a macro point of view that actually inflation is such a contrarian topic nowadays that, you know, there was Bloomberg Business Week, but also recently the Economist right on their cover page saying the end of inflation, deflation will be the big topic for the next couple of decades. And on the other hand, I think that based on the Austrian School of Economics, it always says first there's monetary inflation, then there is asset price inflation, and only the third stage is actually price inflation. I think this tells me, okay, we've seen the first two stages, and now the third stage is ahead. And actually, the market is discounting this. We're seeing that commodities have made a bottom the last couple of quarters. We're seeing that actually silver started outperforming gold the last couple of months. We're seeing that gold is actually in a bull market in most currencies for a couple of years now. We should not forget that gold is trading at all-time highs in 50 currencies at the moment. For example, the euro, but also Canadian and Australian dollar terms. And now gold also broke out in dollar terms. So this is a very, very strong sign. So from my point of view, 2019 has been a fantastic year. However, it is quite interesting to see that still so many people in the industry are a bit disappointed, and it seems that everybody became a bit greedy because the mood and the sentiment at the gold conferences was quite negative. And I say, guys, gold is up 15% in dollar terms since the beginning of the year. It is up 20% in euro terms. It is up 19% in Australian dollar terms. So actually, it's been a fantastic year, but it shows me that the sentiment is still fairly negative, and therefore I stick to my call that we're at the beginning of a big bull market, and that the party only has started.
It is generally perceived that central bankers are pretty much always behind the curve when it comes to economic policy and the consequences of what their policies actually achieve. So as we head into 2020, is there a chance that we will see a black swan event of some kind that central bankers will try and solve in a panic? And with everything that's been happening within the repo market this year, Ronnie, is that an area that investors should be paying much closer attention to?
I agree that recession forecasts are not among the strength of central bankers, I would say. And Jay Powell just said the US economy is the star economy these days. There is no reason to think that I could see that the probability of a recession is at all elevated at this time. However, we have seen the inversion of the yield curve a couple of months ago, and now it's steepening. That's a very, very reliable indicator for recessions. We're seeing that the Feds own recession model, Federal Reserve New York, is showing a 40% probability of a recession in the next 12 months. We're seeing that actually the US is already in an earnings recession. We're seeing that actually it seems that globally we're in some sort of a global cooling phase. So I think making a call for inflation and a recession going forward, from my point of view, from a risk-reward perspective, that's a pretty easy call. Now, why is a recession something positive for gold? We crunched numbers in our last In Gold We Trust report, and we said, okay, in every recession there are basically 4 different stages, and in 3 out of those 4 stages, gold is a very, very good hedge against recession tendencies. So if you say that a recession might be around the corner, you should own at least some gold. What you were referring to regarding the repo market, of course, it is something that is a bit technical, but it is obvious that the so-called plumbing of our system really doesn't work anymore. So we have seen that in the last couple of weeks, the Federal Reserve basically has undone all the quantitative tightening that they did in the last couple of quarters. So we are in the middle of this, what I always call the monetary U-turn. Now, just to give you some numbers, since August 2019, the Fed has actually exploded its balance sheet by roughly 300 billion, which would be an annual rate of 1.5 trillion, or 50% faster than even the spirited pace of QE3. So if they continue that way, the Federal Reserve's balance sheet would actually reach a new all-time high by June 2020, above 4.5 trillion. And it is not only the Federal Reserve that has made this big U-turn. Just have a look at Madame Lagarde, who is the successor of Signora Draghi, and look at her testimony in front of the European Parliament. Actually, she's making a very strong case for not only fiscal stimulus, but also helicopter money. So we actually quoted that, and they've had it in the Financial Times. So they said this would have the scope to examine even more radical ideas, including the possibility of changing its inflation target, and even the idea of the central bank paying money directly into individuals' bank accounts. So QE for the people, MMT, helicopter money, that's not only a theory of economists anymore. It is something that will be implemented very soon. And Karim, that's the most important takeaway. This will act much more direct than traditional quantitative easing. So just imagine if people get 1,500 euros, pounds, whatever, on their bank accounts. What are they going to do? Are they going to buy gold coins? Are they going to pay down debt? Or will they start consuming? From my point of view, they will consume again, and this will have a very, very direct and powerful influence and impact on growth, but also on inflation numbers. So this is something that we should definitely be expecting for 2020, and fiscal stimulus will be the second big topic going forward. So this would, from a macro point of view, be the environment that we are seeing at the moment, which should be very, very positive for gold.
Yeah, some great insights there. Okay, another chart that's within your presentation that stood out for me was the performance of the mining shares when they are in a bull market. Mm-hmm. And so far, the performance for most mining shares has yet to play catch up with the recent moves in gold and silver. So first of all, why do you think this is, Ronnie? Does it have anything to do with a lot of mining companies issuing many shares and raising capital to keep afloat during the bear market, and therefore leaving a lot of excess paper to work through once investors get back into the sector? Or is it more likely that gold still needs to head much higher to then push the attention back onto the miners?
Well, I think, as I've said, we're like very early in this game. So we moved from the so-called accumulation phase now to the second stage, which is the public participation phase. And I can tell you, Kerem, I got some calls from journalists that haven't called me for in ages. I had an interview on a public TV, which I haven't had in ages too. So it seems that, the media and also mainstream finance, the generalists, are slowly picking up on gold again. And this is just a very very good confirmation that we're at the beginning of this so-called public participation phase. Now, normally, this would also be the moment when the gold stocks get going. And in our In Gold We Trust reports, we have analyzed that actually this creative destruction that happened in the gold industry in the last couple of years also was pretty positive, because if you have a look at balance sheets of most of the mining companies, they look pretty stable. Margins are developing quite well. The companies got their costs under control. We've seen some really, really good M&A. So actually, our understanding is that the leverage of the mining companies on a rising gold price is higher than ever. And we should not forget, at the beginning of the year, the gold bucks index, the HUY, was trading at 160. Then we went down to 148 in May. And then we went up very, very strong without any major pullbacks down to 240, while currently we're trading at 212. So we have seen, of course, some consolidation, but there is not any big selling pressure that I would see. So from my point of view, M&A in the mining space will become a very, very big topic. I just read an analysis from my friend Doug Pollitt, and he said, in the iron ore industry, 50% comes from four companies. In the copper industry, 50% of the production is coming from 10 companies, while in the gold space, 25 companies account for just 45% of total gold production. So technical talent seems to be spread thin. That's another big topic. So from my point of view, we'll see more consolidation. And actually, I think the mining space is really something, and this is a key takeaway from the conferences that I attended, that is gaining more interest from the generalists. So I think we're really we're having a very, very positive setup in the mining space, and most of the numbers that came out recently basically confirm my view that silver will lead the next up leg in the mining space. So in our fund, we really aggressively bought into the silver mining space, because normally, from a cyclical point of view, there's gold, then silver follows, then the broad commodity complex is following it, and then the energy space. And we're perfectly seeing this development at the moment.
Excellent. Okay, I think it'd be great to talk about success that you've had within a particular stock within the markets and why it occurred. Were you simply in the right place at the right time, or was it more to do with your data and research that revealed an opportunity to you, Ronnie? And also give us an example of a loss you've made in a stock or an asset class and what you learned from that. Give us some investing lessons.
Yeah, well, this year has been very positive for us. As you know, we're managing our fund based on our Incrementum inflation signal, which switched to a full signal a couple of weeks ago. So at the moment, we're running the highest allocation since we actually started the fund a couple of years ago. And the model basically tells us when to play offense and when to play defense. And now we're playing offense. We're playing a very aggressive offense. So I think the last couple of months have really been good to us, but the years before have been really tough to be in those markets. So, for example, one of our biggest positions is a 10-year Russian Federation bond denominated in Russian ruble, paying like roughly 7% yield. As you know, the Russians are buying gold like crazy, so the ruble is one of the most highly gold-backed currencies. So we've had some positive developments, not only coming from the coupons, but also from the price development. So this was a really good investment. Then our biggest positions, like for example Sibanye Stillwater, doing very well. Harmony Gold, of course, but also Kirkland Lake. Our smaller positions also did pretty well, like Royal Road, for example. We bought some America Silver, and then also the bigger positions like Franco-Nevada, or a bit more of a turnaround story or consolidation story like Barrick. They've all been good investments for us. We have made the move into the commodity space perhaps a bit too early. So we own, for example, the Bloomberg Commodity Index, which is a broad, diversified commodity play, but also some exposure in the energy space. And I think we've been a bit too early in those investments. But the last couple of weeks and the price actions recently basically made us pretty confident that over the long run those are good calls.
Very good. Okay, let's go over some book suggestions for investors who are listening. And has there been anything that you've read this year that you've really liked? Give us some books that we should be paying attention to, Ronnie.
Well, I'm reading and writing quite a lot. So this year's gold report made a new all-time high with more than 340 pages. But we also published a book in German called Die Nullzinsfalle, which will be published in English very soon. The Zero Interest Rate Trap, basically describing our macro view. So this, of course, was quite a lot of work, but I read many fantastic books, and what I do sometimes is I'm rereading books, because it's a bit odd that people often read really good books that they highly enjoy just once, and I would make the comparison with a good music album. Yeah, if you listen to a good album that you like, you wouldn't listen to it only once, because at the second, third, fourth, whatever time, you're understanding this work of art much better. And it's very similar with books. So for example, this year I reread The Raven of Zurich by Felix Omari, which is a fantastic book. I reread Barbarians at the Gate. That's an easy read, but very entertaining. I reread Barry Eichengreen, How Global Currencies Work. I read The Clash of Empires by Gabe Kell, a great book. And then, of course, I also reread probably my favorite book, The World of Yesterday by Stefan Zweig. So those are all books that probably really your listeners will enjoy. As I've said, I reread some of them, and every time I read them, I gain more information, and I enjoy actually reading those books more and more.
Excellent. Okay, as we begin to wrap up, Ronnie, is there anything else you would like to share with us today? Anything else on your mind?
Well, actually, I think it's 2020 is lining up to be, let's say, a very interesting year. And I think that actually this environment that we're starting to see is like the perfect storm for investors in the gold and inflation space. People that understand what is actually happening in the macro regime, and therefore I'm very, very excited going forward, and I think that it's gonna be turbulent, but it's gonna be a great couple of quarters ahead for us.
Okay, many thanks again for your time today, Ronnie. Always great having you on the show, and we'll have you back on in 2020.
Thank you very much, Kerem. All the best to you and all your listeners, and Merry Christmas. It's a bit early, but Merry Christmas and Happy New Year to all.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?